Boom! We are alive, ladies and gentlemen. Thank you for joining us today. This is Tio with the Arcane Bear. We're going to be going over our favorite crypto assets, starting with Bitcoin. We're going to take a look at Ethereum, Link, and AAVE today. Now, for those of you that are new to the Bear family, welcome. Thank you for joining us. If you're also even newer to the channel, remember to hit subscribe and that little notification bell because we go live every day and do in-depth market analysis. So let's just dive right into the charts. And I guess we're actually going to start with Ethereum because here it is. And let's not mess around. Ethereum is actually in a more bullish position than Bitcoin at the moment, but Bitcoin's lining up. But currently, we'll just lean into Ethereum. Now, last night I did a live stream as we broke out of a smaller trading range, but just for educational purposes, let's go over an educational aspect. What we like to do is study the Wyckoff trading ranges. These have functioned the same way for well over 100 years and have not changed. And the reason that is because human nature itself has not changed. It's important to remember that we're not actually charting the markets so much as we're often charting human emotion and the difference between the people who have a lot of money and the people that have very little of it. At this current moment, I believe we've already entered into phase D, but let's go over phase A. Phase A in the Wyckoff analysis is the primary support and our buying climax. That transitions us then into the selling shakeout, or your selling climax to some degree or another. And we've gone over this a few times, but it highlights this really important bar down here, and it's all this red sell volume. So one of the key implications of doing these trading ranges is understanding that it's not time. It's not like, oh, phase B lasts for like 30 days exactly and phase C is 24 days. No. What we do is look for the architecture of each of these trading ranges based off of the amount of volume and supply that's coming in. So as you can see, our shakeout, this touch into the bottom of the trading range, which is usually equal to that of the primary support, it was a lot of volume that came in. Now, as we rose up to the top here, we're like, oh, great, this is going to be a hugely bullish pattern because anytime we close above the box, at least for a reaccumulation range, it's very bullish. Now, here's where things can get a little bit convoluted and difficult because you can have a close above the box, which is an up thrust for distribution, but that usually happens on the opposite. So it would be green supply coming in and very little move upwards. We actually had the opposite of that. We moved up quite a bit with very little supply, kind of proving that it was bullish. Now, the spring is highlighted by two really key factors. The spring went a little lower than I thought it would. I thought we would probably stop around the point of control here at around 1225. But nonetheless, what you want to do is wait for the characteristics of the volume to tell you that the spring is coming in. And as you can see, what we were seeing was this rising effort, basically, of volume coming in. And then you would see decreased patterns of trading velocity effectively. So this is something that Wyckoff, or I'm not sure if actually Wyckoff studied it, but the idea of effort versus result, the amount of supply coming into the market and how much that supply actually affects the price. Very, very important to understand. And if we go in on the 45-minute, it becomes a little clearer here again. And I'll go over this just because I think the educational aspect of all of this is so extremely important. The more you learn, the more you know, the more confident you can become about the positions that you take. So here, this particular price spread was brought in by more supply than this price spread, which was actually less. So this was the law of effort versus result. We had more supply coming in with limited price spread. So for the downside, that was signaling that we were near the end. Now, the other important part to keep an eye on, and this is one of the reasons why I started using the hike and ashy charts more often, are these big long wicks that come out through the bottom. These all often help satisfy the idea of the spring. There's no body there. It's just panic selling, generally by newbie retail investors or people that don't know what they're doing and have a lot of money. But it can go both ways. Weekends doesn't necessarily mean you don't have a lot of money. It could just mean someone is trading positions or moving out. So these big long wicks are usually a big characterization of when we see a spring come in. And on the 1 hour, it's even clearer. The primary last 3 or 4 candles all were like mostly wick and very little body, especially on that last volume bar. The next important part was actually a rising price on falling demand. So falling supply coming into the market, rising price. This is the opposite of the, it's the same effort versus result characteristic, but it's the opposite in the demand characteristics, right? Because now the supply and the demand have changed. The demand is limited, but the supply also being limited sends the price up. And this is what you saw the whole way along up the other day after the spring had occurred. Now, we made a post last night We also did a live video last night as well, going over this beautiful horizontal trading range that had taken place. Shout out to Bear Den Jerry and all of our private members who were able to catch this. As you can see, if I zoom in, we were stuck basically right above the point of control, this red line here, and the top of the trading range right here. So all we had was wicks below and wicks above. This is a key, these are both key indicators that we were in a trading range. Now, again, if we go in a little closer, the 15-minute makes it a little clearer, although we might lose our point of control. And we're seeing that again now, so we'll go over that as well. Yes, okay, it's still there, perfect. So this is a nice retrospective analysis. Even though we went over this in the private bear group, the live stream and the Twitter feed didn't come out until we actually broke around 1260. This is where I got the tweet out right as we started to leave. And it's because we were rising on very limited supply. And that's a key important part. So we had our primary support, our buying climax, our first selling, or our shakeout effectively. So what we want to often do is see that the shakeout volume is equivalent to that of the spring volume. Quite often this is the case. And this is how you learn to be patient to wait for the spring. Now again, notice the spring's wick on the Heiken Ashi. Very little body, mostly wick. This is super important to understand that phase C is categorized by this supply coming in and usually big wicks. Now, you can have the opposite in distribution, but we're not there yet. We're not in big selling climaxes. We will get there, and we'll take a look at how that's possible. Maybe we'll even go over that as we're talking about Bitcoin next. Once we saw here, this was our final test, and then our breakout LPS before we had another big move. Now, as you can see, we've actually already started to form a new trading range here. And this is actually looking like a very bullish rising gradient bottom. So again, what you want to keep an eye on is you've got your primary support, your buying climax, your first shakeout. See your shakeout here. If we go in the 5-minute, you don't really want to look too closely too often, but you can see both of these kind of shakeouts had massive amounts of supply come in. A shakeout, a secondary test. I was even a little confused, like, wait, was this the spring? No, here is the spring. Again, the categorization of it was very nice and clear. You had a massive amount of supply come into the market, and look, mostly wick, little body. These are hugely important characteristics to understand. Now, first and foremost, do your homework so that you can understand phase A. The move through phase B was very short here because we are in a smaller time frame, and Ethereum is getting ready to explode. These are the final moments you'll probably ever see Ethereum this cheap ever again. Now, Bitcoin's a little bit further behind. It's not going to break out as soon. Ethereum's well on its way. It's past its all-time high. And not only that, it's further along in its progression. Its volatility range is likely to become like, we're probably going to go to 2,600 in single gap ups. And that's my personal opinion. So we had phase A. We saw phase B yet last night. And then now we had phase C this morning with this, again, this big wick. So that means what we're likely about to witness is phase D and phase E. Now, this is where it gets fun because we get to decide we might have a secondary test into the point of control and then a backup phase. And then we are going to very, very high numbers for Ethereum. I think my first targets are 2,600 and then outwards as far as 6,000 to 10,000. So congratulations. I know we were in the private bear den this morning. So if you guys want, join the private group. There's no risk because if you're not happy, we'll give you a refund. No, it's like no questions asked, but we have had almost none of those. But in the private group, we were chatting with some of you guys. We were sharing like our potential profits off the trades we're going to make, and they were astronomically high. So I'm looking forward to all the multi-millionaire parties that we have in the future down here in Costa Rica or Mexico together. It's going to be very exciting. Again, the importance of study, I cannot overstate here, guys. I want to jump into this aspect again here and really kind of highlight. I think we're in a reaccumulation schematic 3. And I just think that in phase C here, we dip down into the middle of the point of control a little bit deeper than I had suspected. And that's a good thing. It's not a bad thing. Like, again, this is like hunting an animal out in the wild. You don't expect it to be exact. You just look for the characteristics of the footprint that you're interested in. And here's the footprint we were interested in. We had a break above the box, and then we had a lot of selling supply come into phase C. And again, this big wick characterizing our spring. Now, it's also important to remember that we are in a bull market, and that alone is like extremely valuable information. You can rely on that until we get to the top. We are not there now yet, but we're close. We'll get close, probably like 12 to 18 months away. This March and onwards afterwards is going to melt people's faces, as some would say. It'll be like guitar shred, like it'll be like, what's that guy's name with the big hat? I don't remember. It doesn't matter. It'll be face melting like it was a guitar player. So really important to notice that into phase D, we were rising price on diminished volume again too. Now we're seeing our first steps of CompMan into phase E here too. So again, rising price, falling supply. For the very first time in phase D, CompMan tries to take these big chunks. Here he was yesterday too, just like taking big bites. But look at the amount, look how much we've recovered in this limited supply versus how much supply came in to take the market down this much. Like much higher amounts of supply to push us down just this little bit versus the a little bit of supply of buy that it took to get us right back to where we were. These are the important characteristics of the supply and demand and the laws of effort versus result that you really want to ingrain into your mind as you're going over a bull market. And it'll be the exact opposite as we go into a bear market. Now, one of the things I wanted to go over next, Bitcoin, one of our obvious favorites, but I'm going to start a little bit of an abstraction today. And I'm going to make a comparison. Now, first off, everyone's like, yeah, Michael Saylor. And well, first off, yes, I actually really like that Michael Saylor is recognizing that Bitcoin is it's a monetary asset. That's fantastic. They have 70,000 Bitcoin. But look, lo and behold, 4 million Bitcoins are lost forever. That means the trash, like the garbage pails of history, are actually one of the biggest hodlers of Bitcoin. And they're one of the biggest to be thanking for Bitcoin's illiquidity in the process. Because without all that Bitcoin lost in trash dumps, it would not be easy for us to get that high. If all those 4 million Bitcoin jumped on the market right now, we would drop back down dramatically, very quickly, right? So it's important to remember that these companies that buy 70,000 versus the trash bins that hold 4 million, that supply, that illiquid supply is what creates the volatility in the market, right? So that's important to remember. It's anyone that locks up Bitcoin is actually creating easier price movement upwards. And that's what we'll go over next before we actually go into Bitcoin's price for a finalization here. Glassnode is another great way to measure the supply of Bitcoin on the open exchanges. And as you can see, since March, we have been declining massively. We went from 15% of all Bitcoin on open exchanges down to 14%, down to 13%, down to 12%, and now we are down at 12.67% of all Bitcoin is left on the open exchanges. The other important part that was a new feature, and you guys wanted me to look at this, so I will go over it one more time just to categorize the understanding so you guys can learn as much as possible. This is, where was it? Liquid supply change. So the liquid supply chain shows the amount of liquid Bitcoins on or off of the market, right? So as we'd just gone over, 4 million Bitcoins are hodled by the trash bin of history. So thank you, trash bin of history. You're making the price go up basically by not selling. Yay, yay, trash heaps. But more importantly, as the supply leaves the market, it's easier for the price to go up because the volatility of that very thin supply in the market is really what creates the market price up movement. Now, I think what's super fascinating about what Glassnode is providing us here is data for the future when we get to the top of the market. Because when we get to the top of the market, you know what's going to change? This is all going to go from red to green. And that's going to be a big indicator that we need to start watching much more closely to the price at the upside. Currently, all we have is Bitcoin leaving the market. So we are still in the early stages of accumulation in this Bitcoin bull market, period. So rest your head softly and sleep well at night, knowing that we've got a long ways to go. Until we start to see big amounts of supply come onto the market like we did back at the start of 2017 as the price rocketed up to $20,000, we don't really need to worry about the price going down because even the smallest amount of buying can send the price absolutely soaring. And this is one of the important parts to understand, that it doesn't matter who holds the Bitcoin, it's the illiquidity in the market that makes the volatility come to life. It also does it for the opposite side. As soon as those big players start to put money onto the exchanges, like if the trash heap of the world were to all of a sudden release these 4 billion Bitcoin, like say someone bought a computer that had 1 million to 2 million Bitcoin on it, and they're like, oh, cool, I just found this, and they dumped it all, you could drop the price down astronomically low because That's a huge part of the supply, especially when you compare to these supposedly big treasuries. You've got Galaxy Digital Holdings at 16,000, MicroStrategy at 70,000, Square at 4,700. Even all of this added up basically pales in comparison to the trash heaps. Okay, so it's important to remember. I'm not trying to highlight the trash heaps. I was just kind of making a joke, right? Block One, who raised $4.4 billion, has 140,000 Bitcoin, right? They could drop it onto the markets, although it's much more likely they would try to hopefully do something with EOS, although that has yet to be seen. The Tezos Foundation raised 24,000 Bitcoin as well. We'll see how that goes. Interesting to note that they have $788 billion in Bitcoin from their ICO. That's incredible. Although, mind you, Block One raised like $1 billion, so yeah, I guess it's all ridiculous. Mt. Gox sitting on 140,000 Bitcoin of locked privately owned holdings. And then Stone Ridge, another really interesting company here, sitting at 10,800 Bitcoin. Now, one of the other biggest players is where you start to see basically the exchanges. So again, these are publicly traded companies in the top, private companies in the bottom, and then the ETF-like companies secondarily. So Grayscale is the largest aggregate of Bitcoin holdings. So in comparison, you compare Michael Saylor to Grayscale, not even a tenth of the Bitcoin that's owned by Grayscale. CoinShare, XBT provider, is equivalent with MicroStrategy's, Rougher Investment, 3IQ, Bitcoin. So there's a lot of these large ETF-like funds holding upwards of 2 to 69,000, but Grayscale is obviously the biggest with $19 billion in Bitcoin assets under management. Okay, so why is this important? Tio, why are you ranting about prices and trash bins and ridiculousness? Well, first off, because the trash bin of the world actually holds the most Bitcoin. We have the fact that nobody can sell those to thank for the illiquidity in the market. And that was a sentiment done by Chain Analysis as well. Anyways, next point. So a bunch of you guys I saw were asking about the spring inside of Bitcoin, effectively, right? Now, we saw the spring already. I believe that what we're witnessing is a different accumulation schematic. And it's just, it's slow. I think we're in phase C. Look at, it's almost identical if you ask me. So here we go. Primary support. Here, buying climax, drop back down to our shakeout. Again, shakeout volume almost equivalent to that of the spring, but it doesn't always have to be the case. Just almost equivalent is what we're looking for. Big wick on the spring right here. So I believe we saw the spring already, and what we're witnessing is just this kind of small backup phase at the bottom of phase C. So we have not left phase C for Bitcoin. This is probably the lowest you will see Bitcoin for the rest of your lives, unless the trash bins of the world find a way to open up again and dump us back down to potentially lower. Because 4 million is a lot of Bitcoin. Please understand that 4 million Bitcoins is more than any, I think, what's the aggregate owning? Okay, so right now, if you added every single one of these companies up that own Bitcoin, it's only 1.26 million. That's 1/4 of what is lost in the trash heap of the world. So keep that in mind. If all of a sudden the trash heap were to unlock its goldly gems of Bitcoin, you could definitely dump the price because it's 4 times higher than all of the biggest companies' holdings combined. It's important to remember. Do the math and think about it. Anyways, I don't think that's going to happen, but I just thought it was a fun kind of joking comparison of, how funny the world can be about what it does. So on the 15-minute, what we'll do is we'll take a little bit of a closer look here. We already saw the spring. It was this over here. And again, look at the amount of volume and supply characteristics that you were looking at to create that spring. Right now, we're just in a small backup phase of Bitcoin, and we can actually see pretty much the same thing if we look at this much smaller version of our Ethereum trade right now. So I took an Ethereum long on this the other day. I'm feeling pretty happy about that. And I built into it a little heavier today. And when I see one more final backup phase, I'm going to build into it a little bit heavier again. So while you guys are live with us, give us the thumbs up. I hope you're enjoying this content. Remember, if you're new to the Bear family, hit the subscribe button and hit the little bell. That way, every time we go live, we'll be notified. You will be notified because every day we're going to go live. I have a personal goal to do 1 live stream per day for the entire year. We did 2 yesterday. Maybe it means I get a day off. No, it doesn't. We're going to do 1 every day for the rest of the year. That's like a personal goal that I have, so you guys can look forward to this consistent kind of educational content. So here on Ethereum, let's compare what we're kind of witnessed, or what we witnessed, and you're going to see it on the 5-minute. So here, this area of the spring, effectively, boom, how it kind of slowly leaves the trading range out of phase C. That's what I think we're witnessing in Bitcoin. Just this kind of long, slow retest of supply. There's still big institutions taking profit. You know, we've had a huge gain. There's still more supply in the market, and Ethereum is further along in its trading range cycle. And that means it's more likely to have high amounts of volatility come in. And there's another way to look at this. We can go back to our Glassnode comparison and look at the amount of supply that dropped off the market the other day. We went from 14% down to 13% in a single evening. It's absolutely amazing. So we're going to finalize today off by looking at AAVE and LINK. Now AAVE, here we looked at AAVE yesterday as it was in its final backup phases. Beautiful spring, large amounts of volume coming in. The backup phase, look, rising price, falling supply. Perfect. I'm a little bit too volatile for me to want to trade leverage in here, but I do have a spot position that I was building in AAVE, so yay, AAVE! It looks fantastic. Again, these characteristics are so important. Again, guys, look how we were even through this trading range, we were rising in price on falling supply. And after the backup phase too, you had a surprise, leave the trading range and then fall in this downwards direction, and look at how much price spread we had upwards. And now you're seeing CompMan step up and really advertise, likely to probably try to get the retail investor to buy a little bit more until he marks the price up yet again. We're in the early stages of a bull market, and what we'll do right now is take a quick look at LINK. As LINK is in its final stages of its backup as well. I love how people just randomly say, like, LINK will be at $30 by the end of tomorrow. It's like, what a great, cool guess. But look, you were wrong. And how I could have told you would probably be wrong. Although what's nice is, here's the thing too. We were actually rising price, rising supply. It's not a great sign. What we want to see is a rising price, falling supply, and then LINK will be in ready for blast off mode. So it's pretty close. Again, just to go over the general structure, you've got phase A, which is highlighted by your PS, which is your primary support. Your buying climax, it's your secondary test, this large amount of volume that came in, or your shakeout, large amount of volume came in. Your secondary tests, boom, spring. Look at this wick, characterized by this really long freaking wick. I love these wicks on the Heiken Ashi. It's like a way for me to know now where we are. Let's go back here, spring. Look at this wick on LINK here. It was huge, huge. Not like the body wasn't even a quarter of the size of the wick. It's absolutely amazing to see that kind of stuff. So once you see these very specific characteristics, that's when I start to build my positions, because they become less volatile and the upside is almost guaranteed as in comparison. Look at the length of that wick, 23% on the wick. This was just trying to get people to get out of their leverage positions. Bang, right? And that's what you're looking for. Final stages of phase C. So there's phase A, phase B, phase C is that crazy spring. Phase D is usually notified by, well, first off, rising volume and then falling volume to get out. And then boom, you saw CompMan mark the price up the second time, hit another spring here, and we're in the final stages of its backup phase. So LINK is going to explode probably within the next 5 days. Again, it's not a time frame thing that we're looking at as much as it is conjecture around the specific characteristics of the volume. And right now, the volume characteristics of LINK just aren't showing us that we're going to get that breakout today. Whereas with AAVE, it was clear that it was going to happen soon. And again, back on AAVE, you could see rising price, falling supply. After the backup phase, falling supply, rising price yet again. And then CompMan stepped up and was like, yeah, advertise that price, baby. Let's see how high we can get this thing in single steps. And that's CompMan's goal. He wants all the retail investors to buy it off his hands for more than he paid for it. Take a little bit of profits, let the price go down, drive it down lower, scare out the more retails. Oh my God, why did I buy off it at 278? It's back down to 240. I've lost money. And DOT is going up. And oh my God, I should have just sat in Bitcoin. And then boom, right when you hit that freak chaotic low that all the retail investors get, CompMan shows up and chews up the supply, marks it up, and gets ready to sell again at an even higher price. This is why understanding this stuff is so important, guys. I think the best thing you can do is educate yourself. It is one of the most powerful tools you have in your toolkit, is to spend the time to learn and study. I'm a huge fan of Ethereum right here. I'm actually a bigger fan of Ethereum than I am of Bitcoin. It could be just because I'm jealous that people can buy billions of dollars of Bitcoin and I can't. And I'm like, well, that's boring. You guys suck. Like, do something useful for the world. You're just buying assets. It's not useful at all. Anyways, it's a different story. At least Elon Musk produces stuff. Shout out to Elon Musk for giving $100 million donation, by the way. That's pretty ballsy move. You're a fantastic Elon Musk. Okay, that's the end of today's episode, at least for the condensed information we try to get everyone. At the end of each of these streams, we do like to take a look at the live stream. So the last half of each of our shows are always where we go over the questions and comments that you guys have. Again, one more time, give us those thumbs up because we're trying to pump the YouTube algorithms to get us into tens of thousands of views per video. I think we're gonna be able to do it this year if I just keep showing up. So we're just gonna keep showing up and try that little personal thing I want to get to. And yeah, we'll take a look at the live stream screen. David drops a $10 super chat and says, thank you for doing what you do and being consistent on the daily stream. Well, thank you, David. I made a goal for myself as part of my New Year's, resolution, just something I wanted to do. It's not a resolute idea, just something I wanted to do. So I appreciate that. It's nice to have the support for these things that are kind of arduous, to be able to show up, go and try to learn something new every day. It's not easy. There's a lot to learn in the process. So thank you for that. I really appreciate the super chat there, David. And let's take a look at some of your guys' questions. And I don't want to answer too many of your guys' questions today because it is already 3:30. And if you don't know, it's sexy as fuck right now in the jungle. I'll show you at the end of this. But man, oh man, like I look outside and I'm like, oh yeah, I want to go sit on the beach and watch the waves roll in. Maybe I'll even surf. That's a different story. But so we'll go over your questions before I do that. Okay, Jason Mayer says, comp man equals anyone or anything that can control the emotions of others and desired outcome benefits. Yeah, it's comp man is comp man is a person. Okay, actually, this will be a great moment to kind of study something. You can find a lot of this for free, guys, if you go Richard Wyckoff. That's all you got to do. Just do your own homework. And we're going to read from stock charts because, might as well read from somewhere that studies, trading information and see what it has to say. So I'm going to highlight this idea of comp man because I know it. What is Wyckoff's composite man? Wyckoff proposed a heuristic device to help understand price movements in stocks or assets as the market as a whole, which he dubbed the composite man, or I like to call comp man, because we're gangsters and we're slang, and this is 2021. This is a quote from him in his book, The Course of Stock Market Science. He says, all the fluctuations in the market of the various assets should be studied as if they were the result of one man's operations. Let us call him Comp Man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. Wyckoff advised retail traders to try to play the market as Composite Man played it. That's what we're doing as well. We're just trying to echo Mr. Wyckoff's wonderful ideas here because he was right. And that nature and mentality of human consciousness and greed and fear has not changed. Humans are still monkeys, okay? Fantastic. Shit still works. So Wyckoff advised these retail traders to play the game as Comp Man played it. In fact, he even claimed that if the market, it doesn't matter if the market moves are real or artificial. So never say that the markets are manipulated. That's just complete horseshit. Buying and selling moves the markets. That's it. Who has the most money? Who has the most supply? That's how you move the price. That's not manipulation. That's literally how the markets work. So this is the result of actual buying and selling or public bona fide investors or artificial buying by large operators. It's the same thing. It doesn't make a difference. So based on years of his observations, and Wyckoff taught that the composite man plans carefully, executes, and concludes campaigns. He attracts the public to buy a stock which he has already accumulated a sizable lines of share. And we can see Michael Saylor doing that all the time. Transactions involving large numbers of shares, in effect, advertising a stock by creating the appearance of a broad market. One must study the individual stock charts with the purpose of judging the behavior of the asset for the motives of those large operators who dominate it. With study and practice, one can acquire the ability to interpret the motives behind the action that a chart portrays. And Wyckoff and Associates believe that if one could understand the market behavior of Comp Man, you can easily identify trading and investment opportunities early enough on to profit for them. And this is what we go over today. We study and reiterate something that has worked for over 100 years, again, because human nature has not changed. No matter how many computers and bots and algorithms, the person is the people that write those. They're not separated. AI does not exist. What we do is we write common engineering programs and platforms that the human mind has created. So it's not exempt from the human mind itself. Anyways, we're going to leave it at that. Thank you guys all for today's episode. I really appreciate it. No more for today's because it's just super great outside. This is Tio with the Arcane Bear. I appreciate all your guys' support. Remember to subscribe, like, join the private bear den if you are a brave bear. And actually, you don't need to be that brave because there's no risk. If you can't take no risk to maybe learn something, what are you even doing in the markets? Anyways, Deal with the Arcane Bear. I'm going to leave it with that one. I thank you guys so much. I love these. It's absolutely wonderful. I have a great time. I love that so many of you are learning. I get so many kind messages from you guys that are effectively learning all this great stuff. And making your own trading decisions, your own investment decisions. I couldn't be happier with that. Let's deal with the Arcane Bear. Sing. Can you sing, please? If you want to see me sing, you can go down to the bottom of my channel and you can find a playlist of music where I play a bunch of different instruments and music. I could end today. No, I won't end today with music. Next time. I want to get outside. Play the flute. Yeah, I want to get outside today, guys. I'm sorry. I love you. No loot. Okay. You guys are going to... Okay, fine. Okay, we'll play a little bit of the oud, and then we'll end it like that. Just a little bit of the oud for you guys, because all of you keep asking about music, and I don't want to deny you something you would like so much. So let's see here. Thank you. It's Tio with the Arcane Bear. We'll see you guys again on tomorrow's episode. I love you, and trade well, trade safe, and enjoy the fucking bull market, ladies and gentlemen. Bam.